Hey guys, today I'm going to answer a very important question. How much do you need to invest in order to become a millionaire? And I'm going to show you 9 different investments and how much for each one of them will you have to invest 15 years ago to now have $1 million. And it's very funny because like 7 of these investments are very common, probably have heard of them and people invest in them all the time, but it will compound very slow. And then I'm going to give you 2 uncommon investments that would really fast forward your path to become a millionaire and to retire early. Just one small caveat. I'm not accounting for dividends, so maybe dividends in some of these ETFs, some of these investments will give you a little boost, but I never heard of anyone becoming a millionaire just by getting dividends. It might be a decent passive income, but in this video, we are looking at capital gains, at capital appreciation. Okay, so without further ado, I hope you're ready for this because it's going to be a fun video and it's going to give you lots of insights where you should invest for the long term in order to become a millionaire and where not put your money. So let's get into it. Let's start from the least performing investment to the best performing investment. And let's start with bonds. If you guys have been following and reading my articles, I'm not a big fan of bonds. If you have put bonds in your portfolio, anything over the last 20 years would have really dragged down your portfolio. Let's start with BNDX. BNDX is the Vanguard Total International Bond ETF, so it's international bonds. And to be now a millionaire, you have to invest $740,000 15 years ago. Oh my God, 35% return, not good. What about BND, Vanguard Total Bond Market ETF? Is a very popular ETF. I know tons of people that put money into this ETF. And now to be a millionaire, you'd have to invest $695,000 15 years ago. Also not optimal, 45% return. What about gold? If you have invested in gold 15 years ago, it will be a little bit better. To be a millionaire now, you'll have to invest $280,000 15 years ago. So that's a 258% return. Now we start to see some decent returns, but well, gold over the last couple of years performed extremely well. I don't know if it wasn't accounting for the last couple of years. If we're doing this video like 2 years ago, probably the returns will be way smaller. Now let's start entering the stock market area. What about Berkshire Hathaway? This is the company managed by the legendary Warren Buffett. Well, he retired a year ago. And if you have invested 15 years ago in Berkshire Hathaway to be a millionaire now, you have to invest $144,000. Not bad. That's a 550% return in 15 years. Now we start to talk, right? But I still have 1, 2, 3, 4, 5 more investments to share with you, and 2 of them will blow your mind away, I promise. The next one is VTI. That's the total stock market ETF. You basically invest in a little bit in entire US stock markets. And to be a millionaire now, you have to invest $117,000. Okay, you almost 10x your money here. It's more like an 8x your money, but well, not bad, not bad. What about if you have invested 15 years ago in the SPY, S&P 500? To be a millionaire now, 15 years ago, you'll have to have invested $112,000. That's a 9x on your money. Okay, now we start to see that the power of compounding kicks in when you have sustained returns over a prolonged period of time. Okay, so if you have invested 15 years ago in the S&P 500 ETF, SPY or VOO, now you'll have $1 million, $112,000 to $1 million. Okay, now it's going to start getting very interesting. What about Nasdaq 100, QQQ? Okay, to get $1 million now, 15 years ago, $56,000 will be enough. Okay, $56,000 will be enough for now to be a millionaire. That's over 1,700% return. That starts to be a magic number. $56,000 is not much, right? Most people will be able to invest a similar amount. If you cannot do a lump sum investment, you can probably do DCA every month. Try to save as much as possible. Try to save 20, 30, 40, 50% of your salary to put into ETFs, because now you see that whatever you put in an ETF such as QQQ, it can in 15 years really take you to retirement and can really give you a 17, 18x return on investment. Okay, but are you ready? Because now it's going to get really crazy. Now I'm going to start talking about leveraged ETFs. If you haven't been following, I really love leveraged ETFs, and that's one of the reasons why I'm retired in Hong Kong. I retired at the age of 39 in Hong Kong, one of the most expensive cities in the world. And why? How did I do that? Well, because I save a lot of money and I invest very wisely. And yes, you can invest in leveraged ETFs for the long run, and that's one of my secrets. And I have created a full course which is in my community. Check the link in the description below. You have a free trial, okay? So don't need to pay anything to subscribe. But anyway, let me blow your mind away. So if you have invested in UPRO, which is a 3x leveraged ETF for the S&P 500, 15 years ago, you'll need only $13,000 to be a millionaire. $13,000, $13,000. That's 7,800% return on investment. It's absolutely crazy. So even if you think, okay, leveraged ETFs are more volatile. Yes, they are volatile, but they have better risk-adjusted returns. That's what something called the Kelly criterion tells us. You have an optimal leverage to get optimized risk-adjusted returns. So you have more volatility, but you also have way bigger returns. And so that's what we see here. We might have bigger volatility, but the returns, well, transforming $13,000 into $1 million, it's quite something. So even if you invest just a little bit into UPRO, for example, you'll have very good results. But there are many more leveraged ETFs in the market. Let me show you just one more. QQQ. Are you ready for this? Take a guess. How much would you have to invest in a TQQQ in order to be a millionaire? Take a guess. Think for a second. Okay, let's switch. $3,000. A $3,000 investment. It's what it takes you 15 years ago to now be a millionaire with QQQ. That's why I'm a big fan of leveraged ETFs. Again, imagine if you invest in BND, no one's going to tell you, oh my God, that's so risky. Oh my God, BND, it's a risky investment. Because it's not risky, it's just boring. It just doesn't go anywhere, okay? So if you have invested $695,000 in BND, now you have $1,000. But instead of like investing $695,000 in BND, you invest $690 and then you put $5,000 or $3,000 apart to put into QQQ. Now instead of $1 million, you have $2 million. So leveraged ETFs, I'm not saying to go all in. Please don't do that, because if there is a market crash tomorrow, okay, there is a .com crash, a financial crisis, and you invest all in now, you'll be in the, that will be hardcore. That will be hardcore volatility. These leveraged ETFs can have very big drawdowns. I myself, I have experienced in 2022 over 50% drawdown on the QQQ. So stomaching, like seeing your portfolio going down by 50%, it's tough, okay? But if you invest 5%, 10%, a few $1,000s, like you see here, $3,000 into QQQ, you have the potential to have $1 million 15 years from now. Oh, but past returns are not guarantee of future. Okay, I know that, I know. But the market, history does not repeat, but often rhymes, okay? Stock market, on average, for the last 100 years, only goes up. And for the last 40 years or so, the average return of the stock market is like 11 or 12%. We might have down years, but on average, the market will go up. Bull markets last on average 7 years, and bear markets on average 7 months, more or less. So you know that most of the time we will be in a bull market, and when we are in a bull market, these leverage ETFs compound really, really well, and that's why a $3,000 investment in the QQQ 15 years ago will be now $1 million That's a mind-blowing number. And it's really a big difference when compared to all the other ETFs that we talk about, right? So if you want to learn about all the different strategies when it comes to investing in leverage ETFs, check my community, really, because there I talk about different strategies. I talk about combinations of lump sum and DCA, dollar cost averaging. I talk about buying the dip strategies. I talk about rotating across different sectors. And honestly, I have 20 years of experience in the world of investing. I manage hedge funds, and using a little bit leverage is what the big investors do. They won't tell you, but they do use a little bit of leverage. I'm not talking about, those crazy Wall Street bets, degen leverages of 50x, 100x. That's not good for your portfolio for sure. But using a little bit leverage, a 2x, a 3x leverage, can really improve the performance of your portfolio. So I talk about all these strategies in my community. Check it out. And with this, I hope you can now reflect a little bit on where you should be allocating your investments. Of course, this also depends on your age. A younger person, can risk a little bit more. If you are close to retirement, you probably need that money to pay the bills. So you should allocate most of that money to less volatile investments, just in case you need the money tomorrow, right? But I like to think about this. Sometimes a risky investment is not that risky. Sometimes no risk or little risk investments like bonds, those are the risky ones, because my risk is never making any money. It's the cost of opportunity, okay? I could get a 1,000, a 10,000, a 30,000% return, but because I put in bonds, I only have 30% return. That cost of opportunity is also a risk. Is the risk of having very small returns and never compounding your money at a significant speed. Okay, guys, I hope this was useful. Please give it a like and subscribe if you have enjoyed this video. I talk about investments every single week, so put also the notification bell, and I'll see you again very soon. Bye.